Keeping in mind the investor profile cycle, I want you to outline the best practices for maintaining financial discipline, including regular investment practices and emergency fund management. This is especially relevant to a lot of the young and new investors who are coming into the market. If you could outline some suggestions on your side.
Right. So I think uh, when there is a time to follow the crowd and there is a time to doubt the crowd, right? Because when we say crowd, herd, everything, markets are manic depressive. There are phases when they are in mania, there are phases when they are very depressed. And therefore, the key is the two extremes is when you want to take a contrarian stance. Otherwise, broadly the crowd knows better, and therefore you want to take a stance which is not very contrarian from that perspective, right? Today we are at a zone wherein the overwhelming nature of the investor mindset is they are very young. It doesn't mean that there's a fault with that, but overarchingly, holding periods have come down. So if you look at, say, the greater focus on FNO, for example, that investors are today exhibiting, which is all very near-term focused, right? They're looking at zero-day expiry, etc., rather than wanting to take a longer-term kind of a view. So that's the second aspect. The third aspect is, we are in that zone wherein I hate to say it, but the tip culture is back, which is market kya lagta hai, kya lena hai, what is it that you want to buy, what stock will go up in the next week, the next 10 days, etc. There's a lot of chatter around. Fourthly, if you're driving around, you do see across, for example, taxi drivers.
Hmm.
Even as they have screen of some trading app, which they are also constantly monitoring apart from the traffic that they are otherwise helping us navigate. All of
Hmm.
that does suggest that we have gone a bit too, I would say, overboard in terms of our expectations of market, and therefore I would say that it does make sense. The pendulum has swung to the extent of a bit of a mania in terms of what investors are. Even though in the bigger picture, it's still a small blip, the amount of flows that have come through. But in the
Hmm.
near term, it does look like we are having a bit of too much good happening as far as markets are concerned, and therefore
All
it
right.
does make sense to be slightly contrarian, which is what we suggest is that if you were primarily in, say, small cap, now is the time for you to be in mid cap. If you were primarily in mid cap, to move into large and mid cap. If you were primarily into large and mid cap, to move into flexi cap. These are categories of mutual funds that I'm referring to, right? So that the idea is that risk has got disproportionately rewarded in the last 12, 18 months. It doesn't mean
Hmm.
that you have to be completely out of the market. Ultimately, we continue to believe the longer term profile of Indian equities, but it makes sense to reduce your risk profile by at least one extent at this point of time, given the fact that a lot of Indians are wanting to not miss out on action by
Hmm.
being in all of these short term instruments of FNO, etc. So be slightly contrarian. And to look at segments which have not really worked out to
Hmm.
kind of invest into it. So these would be the two suggestions that I can give at this point of time to the
All right.
average investor.
And before we let you go, if you could list out some common pitfalls in long term financial planning and how they can be avoided to ensure financial fitness. I mean, the role of education, investor education, cannot be discounted here. And before we let you go, the idea is your message to the investing audience, the viewing audience, on the pitfalls that they can avoid when they look at long term financial planning. Because as you mentioned, there will be times of extremes. The question is, how do you stay in the game even then? So, if a final message from you, Harish.
Right. So as they say, it's not greed and fear that bring the downfall. It is envy. It's the worst kind of a thing to have, to see what the neighbor is doing and to try and match up to their standards rather than to look at what our own aspirations are. These are times wherein portfolios have gone up a lot for many investors. Um, rather than getting colored by what somebody else has done, in the markets, I think it is better to be more anchored to what one's risk profile and risk tolerance is. So that is one. The second thing is that today we are in a zone where there is a lot of news flow, but along with the news flow, there is also a lot of noise flow. I think it is very important and imperative to separate, genuine news and wisdom from the noise that otherwise accompanies. So, rather than getting colored by, one day moves, 1 week moves, etc., it is a lot more important to gauge that, 10 years from now, would you even recount what had happened in this particular week or that particular week, or are you more likely to see, where your goals have been met or not? And I think so. Therefore, that is a far more important thing than trying to maximize every trade that we are trying to do at. So that's the second thing. The third thing is, when we say that don't put all your eggs in one basket, it also means that some parts of the basket will not perform, and that is perfectly okay with it. It will. If all your investments and if all your instruments are performing, that also is too much of a problem. Maybe you're not as diversified as you think if all of them are performing at the same point of time. And therefore, it is important to also look at it and embrace certain amount of underperformance in your portfolio in certain instruments, as long as you're clear that why you bought it in the first place. So that would be my third thing. And lastly, I'm just going to echo your words. Time in the market is more important than time in the market. I think a lot of money is lost in anticipation of a correction, कि अभी आएगा, and therefore you end up missing the far bigger picture. Even if ultimately the correction does transpire. So therefore, time in the market is far more important than time in the market.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।